Morning, viewers, and welcome to a brand new week. It's the Economy and Politics Show. We continue the conversation on the socio-economic space and how it's impacting the populace. Today, we're looking at Nigeria and the quest for investment-led growth. It has become very critical considering a challenging socio-economic space. Weak economic growth, weak macroeconomic environment, high unemployment and underemployment, high inflation, and indeed, even a high misery index leads to the fact that there's a lot of opportunities to be created in the economy. Today, we'll be discussing that, and of course, we have Mr. Wilson Erumebor, Senior Economist, Nigeria Economist Group, who will be joining us to discuss this. Recently, the NESG released their report, the 4 priorities for the Nigerian economy in 2021 and beyond. And so we'll be discussing around that as it keys into our topic of discussion. Nice to have you, Mr. Wilson, and Happy New Year to you.
Thank you for having me. It's a pleasure.
Yes. Now let's begin with the top 4 priorities in perspective. We know that from your report, it's clear that investment will play a major role in achieving recovery and sustained growth for the nation. But the size of investments and the direction of those investments are very important. And when we look at those 4 priorities, which has to do with macroeconomic stability, policy and regulatory consistency, the issue of sectoral reforms, and lastly, human capital development, there are 4 areas that need to be addressed immediately, considering the fact that our nation needs to be competitive. If you could take just a few minutes to summarize on how these 4 are interlinked together and how they key to our prospects for being an attractive spot for investment.
Yeah, thank you very much. First of all, I think I'd like to set a context, as to just briefly on where we're coming from and why we think investment is what will get us to where we need to be and perhaps even get us out of the current recession. So if you look at 2020, indeed a tough year, the economy went into a recession. We had a minus 3.6% decline in GDP in the 3rd quarter. Which basically means that, all other major economic indicators, whether you talk social and even social indicators, unemployment, poverty, and the likes, will increase. And you notice that also in the year that, the governments, the federal governments, even state governments, had to implement several fiscal stimulus, to be able to support the economy or prevent further decline and to support businesses and households. So there's the 500 billion naira intervention funds and, so many other fiscal, spending and fiscal incentives. But the key point here is that all of these will have implication on the country's debt level. We've exceeded 30 trillion public debt stock, and the debt is also mounting. There's pressure on debt servicing as a share of revenue. And if you go into from now, to the next 5 years, this pressure would keep increasing, which basically means that even from the government side, the budget could be constrained as to not wanting to, ensure that we have fiscal indiscipline. So that means that private investment is basically what we need to boost economic activities, to boost activities within these critical sectors that we've highlighted. And to get investment is not just about potential, it's also about return and the risk of the environment. So you must be able to make your environment friendly for investment because many other countries are competing for this capital or for this investment. And the most reliable investment with better returns, countries will prioritize that. So what we've argued is that, first of all, macroeconomic stability. You can't have a situation where prices keep, going up. Exchange rates, we are not quite sure as to the direction. What is government policy as regards exchange rate management? Issues relating to interest rates. Right now, inflation is even far higher than the benchmark interest rate and many other interest rates of government instruments. So all this means that there's a negative real returns on investment, and you can't have such investment and expect that investors would come in terms of the large volumes as expected. So we think that issues relating to macroeconomic stability are very key and important. Then on policy and regulatory consistency, investment, an investor or the capital would operate within a sector, within a business environment. And if there are issues relating to policy reversals, where one policy is made within a couple of months, another counter policy is made, you can't have massive investment into that type of economy. There are many cases where even Nigerians within Nigeria, prefer to go to invest in the capital markets, buying bonds and, investing in the stock market as opposed to real investment because of some of these challenges. So what we are basically saying is we need consistency as far as policy is concerned. We need to get to a point where regulators see themselves as enablers of businesses. One of the key points we are highlighted in the report is the Nigerian factor, which basically means that if things are not simple, we don't get to do them. So it means if things are more difficult, then, oh yes, that's when we have to, it seems like that's the direction of how we want things to be. So, but we are saying things can be done simpler. Businesses you can apply online and get to do the process seamlessly. You want to, seek appointment or you want to, get your visa. You don't have to go through the back door. These are simple, simple areas of reforms that are often neglected, but they are very important for investors. So there are cases where investors would complain as to clarity, in terms of government policy around their area and all that. So I think what we've said basically is these issues are very important and need to be addressed if we are to attract investment in the quantum that we need.
Okay, so you've really said the macroeconomic stability, which is very important, and of course, policy and regulatory consistency. When I looked through your report, some things were very touching to me. For example, our exchange rate did not experience that growth that it should experience. From 2013 to 2020, we saw the fact that at 2013, the exchange rate, the external reserves, the external reserves was $43.6 billion and is currently around $35.4 billion, showing that it's not grown as expected compared to Indonesia that had $111.9 billion as at 2014 and currently has about $133.6 billion, showing some level of growth. So indeed, like you said, the foreign investment inflows, again captured by reports, plunged 56.9% in first to third quarter of 2020. Not so good for us, and definitely the reason why we need to really take, like you said, macroeconomic stability and policy and regulatory consistency seriously. But let's look at the key sectors that will need to get that focus of investment, because if I'm coming to invest in Nigeria, the government policy strategy should be able to say what are those key sectors that we should address. And still from your report, oil and gas, crop production, at a point where among the major sectors accounting for over 90% growth. But if you can take us to the sectoral reforms and those key sectors that are drivers that we should begin to attract investment into.
Yeah, thank you. So investment will go into a particular sector, and we're talking here about not just foreign investment, we're even talking also about local investment. So what that means is the sector in which that business would operate has to be stable. Policies within that sector has to be stable. But even more importantly, there are specific sectoral reforms that we think are needed, within and across some of these sectors. If you notice, in the early 2000s, Nigeria attracted a huge quantum of investment into the telecom sector, even into the oil and gas and power sector as well. But the key thing to note also, and during that same period, we saw a case where unemployment increased, poverty increased, and some would allude that period to what we call jobless economic growth. And one of the key things that, featured around that time is telecoms is important, no doubt. The services sector, very important, crucial for, job creation. But if you notice and you look at Nigeria's labor force and labor structure, you'd find that many Nigerians are employed in agriculture, manufacturing, and trade is the second and third largest. Trade second, and then manufacturing, and then you have construction and all that. So telecoms is, employs very little, but although it has very strong linkages and value addition, across all the sectors. But in terms of employment, it doesn't have that strong weight when you compare with other sectors. So what we've done basically is to say that if Nigeria has to move to an era of where growth is inclusive. I know now we're in a recession, but I think looking forward, even when we eventually exit the recession, we should be talking about how when you have economic growth, people want to see that translate into job creation, into poverty reduction. That's when growth matters to the people. And we are saying there are some sectors based on several criteria that we must be able to attract investment into those sectors simply because, one, they have very stronger weight in terms of employment. If those sectors were to achieve growth, there would also be growth in employment within those sectors. They have very stronger weight in terms of forward and backward linkages. So if, for instance, manufacturing, if you can't grow manufacturing without developing the agri sector, and when you produce goods, you also sell services, also becomes very important. So if manufacturing sector were to display improved performance, it means that that performance would also affect or positively influence all the sectors, both those that it relies on for raw materials and those it will sell to. So these are these criteria we looked at, and then came up with the 6 sectors that we highlighted in the report. Manufacturing, construction, trade, education, health, and professional services. And we've made an argument that within these sectors and across these sectors, an investor would want to see clarity in terms of the direction of the sector. So many other countries, for instance, you pick manufacturing. Where is the manufacturing headed? Within manufacturing, what are the areas of competitive advantage and strength that Nigeria has? So many examples we can cite. The leather example is one of the key areas that Nigeria has very huge advantages in. We've been part of several sessions within that industry, and the potential is just so huge. But there needs to be some level of direction. What are the long-term goals in the next 5 to 10 years? What are the sub areas within the leather industry that we need to attract investment into? What are the specific bottlenecks across or within each of these sub areas that government would commit to removing and say, by this time we would exit, we would, address some of these concerns and challenges. So I think those setting the direction for these sectors is also very important when we're talking about, both local and foreign investment. What it does basically is to provide some clarity. There's a long-term plan. Maybe, for instance, the government is in the process of, developing the Vision 2050 plan. How are these linked to some of these sectors that are crucial in terms of job creation and poverty reduction? And mind you, across all the sectors, opportunities are abound. And you all know that Nigeria is a country endowed with so many huge mineral deposits and human resource. So all we are saying is, let's pay more attention to these sectors, implement the necessary reforms to unlock the inflow of private capital into these sectors.
Yes, just to note that the NESG has also been at the forefront of driving the 2050 agenda. So definitely your works and your advocacy is being taken note of by government. Hopefully we'll see your policy commissions having more engagement with the relevant ministries and departments to begin to align the 2050 vision going forward. But let's look at a very important area, which is rejigging our trade and investment policies, because you can't talk about investment into an economy if we don't even have a clarity of your investment and trade policy. And when I'm looking at that, I'm talking about issues around tariffs. You've mentioned the FX management approach, which is very key. Issues around pioneer status for companies coming in, and even the issue of remittances and FDIs. I mean, how you woo people to come and invest in an economy is very important to your trade and investment policy. And I would also add that recently one of the leading economists talked about the fact that we are not leveraging our assets. For example, he said Nigeria, no government equities quoted or listed on the exchange anywhere, whether local or in the world. Like Saudi Arabia has the Saudi Aramco listed in the New York Stock Exchange, or we had the Petrobras of Brazil, also an equity asset that's been floated. So are we looking at rejigging our trade investment policies to begin to look at these aspects? And is NESG engaging the Federal Ministry of Industries, Trade and Investment around this?
Yes, trade, of course, is very important, and investment as well, trade and investment policy. And also, just to add that we've signed the AFCFTA agreement, which basically means that countries would start implementing and removing tariff on 90% of all their lines of goods, tariff lines of goods, in the next 5 years, which means that there's going to be more liberalization. And if you look at several reports, the NESG released some reports on the impact of the AFCFTA, on the economy. The World Bank even last year released another report. They adopted several, CG modeling technique to be able to estimate how the trade will impact several countries in Africa. And one of the findings, the key findings from all these reports is that countries that would gain from the trade deal are those that would, take bigger steps toward being prepared, are those that would have stronger industrial base, and those that are also implementing reforms to improve their manufacturing and services sector. They cited a couple of countries, and there are those that will leverage on the opportunity of the trade deal to improve on their services. They may not have a big industrial economy as at now, but over time they will. But for Nigeria, I think a lot more needs to be done, particularly when you talk about trade policies. As we speak, what is the status of Nigeria's trade policy? The last time a trade policy was released was, I think, in 2012, when it was even revised. And till now, we don't have, an up-to-date trade policy, that defines the trade goals for Nigeria, the areas where we would be competing in, the areas where we are strong, and areas where we can take advantage of some of these things and export to some of these African countries. So we need to do a lot more in that regard. There's been several fora, several meetings, held to see how Nigeria can do that. And I'm sure it's even a priority for the National Action Committee on the AFCFTA. The other thing is also on data. And I think, we've emphasized how important this is over time. And we've said, several occasions that data should drive policy making. Data should drive, whatever reforms we're trying to make. And, we have data on exports, particularly for goods, but I think a lot more needs to be done to capture data on services. Services is one big area in the trade deal that, many countries are looking out to. Yes, it's not very clear at the moment, but these are areas that, we should start releasing data on to know exactly what our areas of strength are in services. How much of services do we even import and export to other countries? What are the sub areas of services that we get to play in, and how can we improve these areas? For instance, business process outsourcing. There's a company in Nigeria that is tremendously doing well, competing with some top brands in India and all that, and they've been in existence in Nigeria for quite a while. And they've also made an argument that BPO is a very crucial industry that can employ people if we take it serious. So there are sub areas like that if we have data on, it will help us to plan ahead and take advantage. Then in terms of investment policy, I think we need to also, yes, we've made several progress. There's the pioneer status, which basically grants companies holidays when they come into the country and all that. But I think some of these things also need to trickle down as to, in terms of implementation. People need to feel the impact. Some of these things, some of those incentives, we need to ensure that access, they get, many businesses can access them, and it's not just on paper, it's actually a reality. Issues relating to infrastructure, providing better roads, issues relating to stoppages, checkpoints, as little as they are, some of these things are cost to businesses. And if we're talking about competitiveness, we must be able to ensure that businesses can operate in an environment that is, that some of these bottlenecks are reduced to the barest minimum, so that they can expand outputs, they can, employ more people and even get more investments and expand the economy as it were.
Yeah, I mean, I like what you said about the need to revise our trade policy in a way that it can be competitive and also attract investments into the country. I think that's very, very important. We've had several trade ministers, and so hopefully the current minister, Tumba Niadeboya, would work assiduously to see how that is done. And we would like to see NESG and other key stakeholders work in that regard through a very robust policy reform. And also, let's go to our last tranche of conversation. It's about the key scenarios for Nigeria's growth trajectory in 2021, which NESG has brought out. I'll start from the third, which is, for me, scary. I'm very hopeful that it won't happen. Is that the scenario is oil price at $30 per barrel, and production is 1.4 million barrels per day. Government spends 1.1 trillion naira in terms of capex. And then we're left with minus 2.5% growth, which means that it's negative, and of course, we still have a recession. And inflation, 17%, according to Economist Dr. Doyin Salami. When we hit 17% inflation, that's where everything affects output. I mean, we can't even talk about productivity with whatever we're doing. So that third scenario is a scary one. But the middle one, the second one, that's second to the first, $44 per barrel, $44 per barrel, then 1.7 million barrels per day production, 1.7 trillion naira capex, and a 0.7% growth at the end of 2021 with 16% inflation is lean in terms of managing to navigate. And then the first, of course, which is the one we're hopeful that of course, but it would take a lot in terms of what we call a magic wand or a very, very superb mix of reform and actions and good things happening in the international space, particularly if the oil price is $51 per barrel, 1.8 million barrels per day production, no issues in Niger Delta. Then government is able to achieve 2.3 trillion naira capex, that's in terms of budget, capital expenditure, and we have 2.9% growth. That's where we want to be, 2.9% growth. And inflation at least is tapered to 14.5%. Mr. Wilson, these are three very interesting scenarios. Where do you think Nigeria will end, if I were to ask you? From your
well, basically, you want me to pick one, and I'll just pick anyone randomly. but the interesting thing about scenarios is that sometimes, because of the level of uncertainty in the environment, especially when we're dealing with COVID, it's quite difficult to tell what exactly would happen. If you remember in 2019, and even in January 2020, when many organizations were presenting their outlooks for 2020. A lot of them, growth was around 2.5%. The prediction for Nigeria, some even said 3%. Some said we would grow. Bullish projections, on the economy, particularly relating to GDP. But when COVID came, I mean, we're seeing a recession, which is basically an opposite of what many thought would happen. But still in January, when we launched the macroeconomic outlook, that was last year, January, then COVID wasn't really serious as it is now. We had the worst case scenario where we said inflation would get to 15%. We said the GDP growth would be minus 1.9%. And the assumption was that crude oil will get to $44 per barrel, and output would decline. So a lot of people, said, what are these guys saying? Everybody's, looking optimistic. Yes, we had the best case, but many people said the worst case couldn't happen. But as 2020 turned out, it appears that, we even are close to that worst case. Of course, we would contract more than 1.9%, but that's basically because the assumption was $44 per barrel, and we went, below that projection, in the course of the year. So, but the key message here is that any of these scenarios could play out. I mean, the worst case could play out. It could, like we cited in the report, there could be a third, fourth, fifth, sixth wave of COVID-19. And if that happens, of course, we are looking at a case where the recession continues. And our response to it also matters as to where we would, be. But on a optimistic side, I would rather, stick with, or maybe on a moderate case, I'd rather stick with the business as usual scenario that I believe it would play out, or maybe somewhere between the business case and the worst case, somewhere between 0.9 and 2.9, if you allow me to pick, but the key message here would be that if we don't have, series of worst case waves, third, fourth, fifth wave of COVID, we would likely return to positive growth in 2020. And I think that's just the key message. But also, it's not just about growth, like we cited in the report. We also, mentioned that growth has to deliver a reduction in unemployment and poverty, and that's where we drew attention to also those key sectors and also the priorities that we think needs to be implemented. Because we've seen last year that if you don't have inclusive growth, when growth is not inclusive, it comes at a cost. We've seen increase in social vices, insecurity, theft, and all that. Those are signs that the economy has not been inclusive. A couple of people have been left out, of that growth process. Inclusive growth basically means majority of Nigerians contributing to the growth process and also benefiting from it. So if that is not happening, it means we're running a fragile economy that could, experience heightened social vices. And we hope that that's not the case for Nigeria in 2021.
As we wrap up now, the young people, the millennials, are very important. You're also a young person, Ms. Wilson, and NESG gladly is engaging the young people in policy, advocacy, and economic strategy. How important is that in integrating to 2050 and ensuring that our economic policies take into consideration our demography, and you have a huge demography of young people?
Oh, yes, I think that's one of Nigeria's biggest strengths and advantage, the fact that we have a vibrant young population. The only thing is how can we use this to ensure that this potential turns to reality and it doesn't turn to a cost to the whole country. So I think, yes, I mean, we've seen lots of innovation in the last few years driven by so many young entrepreneurs. We've seen even companies from the US coming to buy out Nigerian companies, placing millions of dollars of investment into ideas that were shaped in the streets of Lagos, Ibadan, Abuja, and all that, becoming, some of these brands becoming global entities, dominating, opening branches in Kenya and all of that. So that tells you that there's a whole lot of, opportunities, and we have that skill, we have that, drive and energy to want to create and innovate things that the world needs and things that we also need. So what I think needs to be done to harness that, particularly from a policy side or maybe from the government side, is to have more engagement with young people. Some of these policy decisions that are made, I tell you, I think if we're looking at a case where young people account for, over 70% of the population, how come I think at every point and at every strata of the policy-making process, these young minds need to be engaged and, their perspective matter because they come with lots of innovation, lots of, how to see how to improve processes through technology and all that. I mean, we're talking of ease of doing business. We're talking of maybe simple things like applying for visa, or there are many young Nigerians that have brilliant ideas as to how we can do these things seamlessly and even edge out corruption in some of these processes. I think it has to be a deliberate drive from the policymakers, particularly at the top, to see how we can leverage some of these, strengths and opportunities and skills of young Nigerians. And now for the larger set of Nigerians who may not have, that level of education as required, maybe at the tertiary level, I think one key reform, and if you look at many other countries and what they've done, is skills development is very important. And I don't think as a country, we are paying as much attention to that. I think we need to have, several national skills programs where we can get to train young people in different skill sets. Our technical colleges, technical education needs to be strengthened more to deliver value, ensure that there's so many areas, so many skills areas that I think Nigerians can do better in. Right now, Nigeria is even importing labor from several countries, in some areas. So I think having to design a national skills program, and we talked about it in the report, this is also very important in addressing some of the key concerns, of unemployment.
Yeah, I mean, you just wrapped it very well. National skills program. I mean, we've seen what has happened in the fintech space, technology space. We've seen what happened in the creative industry. So if we can have a very robust and inclusive national skills program, we'll be able to harness the potentials of the young people we have. Thank you very much, Mr. Wilson Erumebor, Senior Economist, Nigeria Economist Summit Group, for joining us virtually today to discuss around the NESG report for priorities for Nigeria in 2021 and beyond. And we are looking at how Nigeria can achieve an investment-led growth, yes, considering our socioeconomic challenges. I hope to have you in subsequent editions in the year as we continue to look at the developments that are happening and remain optimistic that it will have a good scenario at the end. Thank you once again.
Thank you for having me. It's a pleasure.
And that was Mr. Wilson Erumebor, Senior Economist, NESG, discussing Nigeria's economy in 2021, particularly our quest to achieve an investment-led growth. You can join this conversation, watch more of our Nigeria economic stories and videos. First, join our website, www.proshareng.com, and when you get down to the website, go to the right-hand bar, click on Nigerian economy. You'll see our latest developments and reports around the Nigerian economy. And still on our website, if you click again, go to that right bar, check reviews and outlooks. You'll see all we publish from the Nigeria Economic Summit Group's analysis on the Nigerian economy, including what ProShare has also published in terms of the 2020 review and 2021 outlook. You can also follow the Nigeria Economic Summit Group on Twitter at official NESG. Follow us also at EcopoliticsNG, at ProShare NG, and of course, follow us continually for our discussions. We'll call it a wrap today, and of course, if you have any comments, views, and additional concerns around how Nigeria can achieve an investment-led growth, send your views and comments to news@proshareng.com. We'll be glad to receive them and respond to them appropriately. Till another edition of this show, thank you for watching. Have a nice day and stay safe.